Hi, this is Zach here with the weekend edition of the Bulletin Board Heroes here at Zach's Traders Cafe for Sunday, the 28th of July. Starting off with the FTSE 100, which against all the odds has broken out of that falling trend channel there from May. We bounced off that May support line there, which was a great coup in terms of identifying that line there, and then the market actually bouncing at 80.56 versus 80.70, which was the guess as to where it would bounce. Current situation is that we may not be quite out of the woods in the sense that that line from May could be up there at around 83.20, but we've been going with the idea that a break of 82.60 and that line in that position could take us up to 83.71, and the June peak, obviously we've got the prize, which sounds rather unlikely that we could get up to 87.50 over the next 4 to 6 weeks at the top of that rising trend channel from October. But that would perhaps suggest a stock market bull market. The other thing that we were waiting for was an end-of-day close for the RSI above 55, which has blocked the market since the end of May, which is a long time. RSI closed at 58. So RSI, if we believe that, we've got a leading indicator on the upside. And ideally now, even if there is a pullback, we don't go back below the floor of that rising trend channel from October, now at 81.90. Moving on to the DAX, and here was similar jiggery pokery either side of its rising trend channel. I suppose we closed basically on the 50-day line and on the floor of the channel, so there is a chance of a bear trap rebound in place, and we'd already factored in that 18,000 could be the low on any rug pull. The line to beat here is 18,600, and we're looking for that to then be broken and head up to not only the year highs, just below 19,000, but a best case scenario target of up to 20,000 by the end of next month. But the key here, I suppose, is holding 18,000. Moving on to the Dow, and here picture decent in the sense that we bounced just below old resistance, just below 40,000, and have pushed up again. We haven't needed to test the floor of that rising trend channel from this time last year, 39,400, although that's still a possibility. RSI rebound off the neutral 50 level, which is one of the leading indicators we like, and looking for 42,000 perhaps as soon as the end of next month. But the key, I suppose, is staying above 40,000 and the RSI staying above neutral 50. Moving on to Bitcoin, where President Trump seems to be intervening on this market's behalf. We've actually had an unfilled gap to the upside there, bounced off the 50-day line. Initial resistance here, 70,800, but an end-of-day close through that, and we could have a new leg to the upside. Obviously, lots of crypto maniacs looking for big targets on the upside. Top of that channel there from back in October, heading towards 89,000, and that could be opened up if we get that 71,000 plus scenario for this market. Two bounces of the RSI, or for the RSI above neutral 50, and only really back below the 50-day line there at 63,000 or so would really delay a potential recovery there, especially after that gap higher. On to gold, and here there was a bit of a rug pull last week, but at least we managed to stay on the right side of 2400, also the right side of the floor of that rising trend channel on the 50-day line at 2380. While we're above that joint sort of support zone, looking for 2600 as soon as the end of next month. You see we've had our second bounce off RSI 50, which is healthy in terms of being two potential leading indicators on the upside. Moving on to the stocks, and returning to Atome, and here things looking quite chirpy. We had a potential rising trend channel base with a 70 pence target, or 71 pence target above that. We're upgrading the stock to 95 pence, and the upper parallel of that rising trend channel, and November resistance line projection. We gap through the 200-day line, which is a very strong signal, and that's remained unfilled. And we've also got an RSI 50 rebound, so things looking decent there while we're above the old target there, or the initial target there at 71 pence up to 95, the possibility. I looked at World Chess a while ago, and the shares, well, basically off the back of that unfilled gap to the upside through old resistance at 6 3/4. The initial target here was 11 pence, and above 11 pence we can upgrade the whole situation to as high as 26 or 27 pence by the end of next month, or the way things are going, even sooner. You can see there have been no red days for months there. In fact, the last time was in March, so it looks as though this situation is effectively limit up, as the futures traders would suggest. Moving on to a stock which I haven't looked at for a while, Genincode. Here we're having another go at the 200-day line. That's there at 6.25 pence, looking for an end-of-day close above that. We've already had the shares recovering the old June support there around 6.1 pence. The longer we can stay above that and the 200-day line, the better the chance of a move up to 11 pence by the end of next month. Ideally, we stay on the right side of 5 pence in the meantime. Itaconix is next, and here you can see that we've had an unfilled gap to the upside off the low. We've got a rising 50-day line, which is very pleasant, and I suppose the 200-day line also rising too, so that tends to, or suggests that we're going to head up to the top of that rising trend channel from back this time last year, basically at £2.52, and that could happen as soon as the end of next month. Ideally, of course, we stay above the old June peak of £1.82 in the meantime on an end-of-day close basis, but it looks as though we can do that. Moving along to Inspiration Healthcare, where I've given the stock rather disproportionately large amount of exposure. Here we've had Bear Trap Island reversal, so gapping down there at the end of June and gapping up for the end of July. 50-day line already rising. We broke the gap up day level at 23.75. Initial target here, the top of that rising trend channel from back in March at 34 pence, and looking pretty healthy there. On to the next situation, which is Mkango, where the situation is that we've been at the lows. We've got a support line projection there from back in the autumn. Let's say that's running as I've drawn it now. And above the latest lows, recent lows around 4 pence, looking for at least a bounce back to the 50-day line at 6 pence over the next couple of weeks. News permitting, best case scenario here at the moment is we head up to 7 pence and the top of that falling trend channel. But obviously, as I said, we need to hold above 4 pence. No new lows there. Stock which I covered a while back and had a great day on Friday, and it was not surprising, actually. I wasn't looking at the stock, but not surprising given the way that we had a sideways shuffle along a rising 50-day line near the low. So that is one of our favorite setups. Initial target here, that resistance line there from April, and the top of that old gap there from April around 29 pence. So if you're already in it, maybe that's what you're looking for. Stop loss, or at least resistance on the way down, was at 17.5 pence, and that should hopefully become new support for the shares, depending on any fundamental developments. Moving on to Panthera, which has been in consolidation mode for a long time. The current situation is that we're trying to break out of the recent range, which has been very sticky and very persistent here for many months. An end-of-day close through 7.5 pence is what we're looking for. Hopefully we'll get that early next week, and then the next level up to 11 pence, the old September resistance. But just the first hint that this could be the time when we break through, given the way that the 50-day line is now rising. When we got through the 50 and 200-day moving averages, 6.1 pence. So hopefully we'll stay above that ahead of a potential breakout for the stock. The other point to note is that we've got bullish divergence there, so low lows for July, but higher RSI trace, and that should be a leading indicator, as well as the gap close that we've had through 6.1 pence from the beginning of this month. On to Plexus, and here we're in a very long-dated falling wedge situation. The resistance there at 14 pence at the 50-day line. Bullish divergence here as well, so low lows for the last few days, but higher RSI trace. So looking for at least a breakout to 16.75, and ideally we get up to 26 pence and the top of that falling trend channel from back in September. By the end of next month, it would be quite a nice situation if we manage to do what the chart is perhaps suggesting at the moment. Skinbio Biotherapeutics is next, and here rising trend channel base. We had the signal there, the break of that triangle there back in March. It took a long time. It's taken a long time to break up again, but we've got this U-shaped or saucer-shaped turnaround now, looking for at least 15.5 pence over the next week or two, while we remain above the old May-June resistance at 10.3 pence. And actually looking for much more here. The next level up would be up to 22 pence, the upper parallel of that rising trend channel base. And ideally we get that by the end of next month. Next up is a situation which is looking quite interesting in terms of being a recovery surface transforms. Here you can see that we've got the shares moving within a broadening triangle and bouncing above a rising 50-day line. So on that basis, we're looking for 3.25 pence, that May resistance line projection by the end of next month, while there's no end of day close back below the 50-day line, 1.5 pence. On to the last two. First one is Trellis, and here you can see that we've got a sideways shuffle, the type of sideways shuffle we had back at Petrofac, but this time I've seen it in time, and looking for the shares to hit 3 pence in the top of that triangle from back in March by the end of next month, while we remain above recent support at 1.5 pence. Finishing off with UK Oil and Gas, which has risen Lazarus-like at the end of the week. Unfilled gap to the upside on Friday, which is a very strong signal. It's also a bear trap island reversal, so gapping down earlier this month and then gapping up for the end of the month. So very, very strong signal there. All we're missing really probably is an end of day close above July resistance at 0.028 to take us up to as high as 0.047 by the end of next month. But that's probably the first really strong bullish signal, charting signal we've had there for months or even years, and we're backed by an uptrend line in the RSI window as well, which should give extra momentum. In fact, it's already given decent momentum to the shares. That's it for me today. More updates during the week.